Hey guys, welcome to The Market is Open. Please subscribe for more Tesla videos. Today I wanted to talk a bit about Tesla, which jumped up to $365 per share today. That's up 2%, and it's up quite nicely from its lows this year. Today we're going to talk about this interview from CNBC. These guys were talking about Tesla. On the left, we have Craig Johnson from Piper Jaffray, and on the right, it's Mark Tepper from Strategic Wealth Partners. Both of them have talked before in September about Tesla, and recently they just spoke again. Back in September, both of them were actually bearish on the stock, and the stock was at $260 in September. Today it's at $365, so it's up about $100 per share. So let's see what they're saying today. So Craig Johnson from Piper Jaffray, he's a chartist. He mainly looks at the chart of the stock. Back in September, he was saying that there was a floor of support at $245 per share. And he said that if the stock price broke below $245, it would go to $178 per share. That didn't end up happening. The stock ended up bouncing back up. So now he's saying that a short squeeze is coming. He believes that if the stock price goes over $390 per share, the stock will break out in a short squeeze to 525 to 550 per share. That's his price target on Tesla for the short squeeze. He says the shorts are getting fairly nervous. The short interest ratio has been falling since about the April timeframe. So let's have a look at the short interest in Tesla. So April is down here at the bottom, which was the peak. 39 million shares were short for Tesla. In November, on November 15th, which was the last date we have the short interest numbers, it was 28 million shares, so it's down significantly. Yeah, it's still a gigantic portion of the company. Tesla has 171 million shares outstanding. Of course, that includes shareholders such as Elon Musk, who's not selling his shares. So the float, the actual shares traded, is a much smaller number than this. So he's saying right now, back in April, it was 31% of the float was shorted, and today it's still 22%. So people are covering their short positions, and he believes that if the stock crosses 390, there's going to be a huge wave of people covering. According to this, it'll take about 4 days to cover. It seems that the average daily share volume has fallen. So if this huge amount of people start to cover, that could really drive the share price up. It's hard to tell if he was correct in September because he said if the stock were to fall below 245, then there would be a floor of support at 178. That didn't end up happening, but he wasn't long the stock though. Chartists tend to be long the stock after it's gone up, so it's hard to tell what his track record has been. Okay, now we're going to talk a little bit about Mark Tepper's position on Tesla, or his view. I don't believe he's invested or short the stock. He's from Strategic Wealth Partners. Back in September, he said he wouldn't touch Tesla shares with a 10-foot pole. Of course, the stock was at 260, and now it's at 365, so that call was completely wrong. So now he's bringing up a couple points about why he wouldn't want to touch Tesla shares. So his view hasn't changed at all. He's still negative on Tesla, and he still says that it's a gamble. I'm not sure how much of a gamble it is now that they actually have positive earnings. It might be a gamble not to own the stock, actually, given that the momentum that Tesla has right now. So first of all, he says that the Tesla factories are actually just tents, and that's a reason to short the stock. I don't know. I think that seems to be taken out of context a little bit. It's not really a tent. Boeing builds its planes in tents as well. This tent from Tesla was put up in just about 3 weeks with extremely low cost relative to their other operations. So actually, you would probably want to see more tents because it's cheap for them to put these up. And in the 60 Minutes interview, Elon Musk says that these tents have actually increased their production, or helped increase their production, by about 50%. So you'd want to see more tents if you're a shareholder. And it's also not true. The factories are highly automated, and it doesn't seem like any other car maker has a type of factory like that Tesla has. So I don't know if Mark Tepper is correct about saying factory equals tents as a bad thing. Okay, he also brings up that Tesla recruited unpaid fans to help sell the Model 3 cars to make the numbers last quarter, so he believes that they won't make the numbers this quarter. Again, I'm not sure that's entirely, I think that's taken out of context a little bit. The fans, first of all, which company has fans that will sell your cars for you for free and not take any money? So that's pretty impressive for Tesla. I don't think that's going to continue. I don't think Tesla needs their fans to keep up sales for the next quarter. I think that was just a temporary solution because of the sort of growing pains of the company. I think Tesla now is probably better positioned and is ready for the higher number of cars that it's going to be selling. So I'm not sure that this argument is still true in the fourth quarter. Okay, Mark Tepper says that Volkswagen is coming after Tesla. They have a Model 3 competitor that's going to be half the price of the Model 3, and it's coming out next year. So I'm not sure what this Volkswagen competitor is. If anyone knows what car he's talking about, please write it in the comments below. I tried Googling for it, I couldn't even find it. So I don't even know if Volkswagen has a competitor coming. I'm sure they're working on electric cars. Nobody knows about them. Volkswagen is a gigantic company, though. It's probably in the top two of the top car makers in the world. I mean, they did have that emission scandal with the Dieselgate. So I guess they're probably investing in electric cars now. I'm also not convinced that it's going to come at half the price of the Model 3. I believe next year the Model 3 will probably hit 35,000 as Tesla has been talking about. So I would like to see if Volkswagen has a car that's half the price of a Tesla, but it seems highly unlikely. His last argument is that there aren't enough Tesla charging stations in the United States. So Tesla has the largest charging network out of anyone in the world. Actually, I'm not sure. That seems more of an argument against Volkswagen because they don't have any charging stations in the United States. I believe they might have one. So this actually seems like a positive for Tesla. He's phrasing it as a negative. I think there's almost like 95 or 99% coverage of charging stations in the US. If you want to travel from any point in the country to any other point along major routes like highways, there are enough charging stations to get anywhere in the US and probably Canada as well, given that most of Canada's population is actually near the US-Canada border. And there's also charging stations in Europe and Australia, and Tesla's moving big into China soon as well. So I'm not sure what he's talking. So I'm not sure what he's talking about with this argument here that there aren't enough charging stations. Sure, Tesla's going to be adding more. I believe they have a roadmap about which charging stations to add. Elon just announced maybe a couple hours ago that they're opening up 11 more stores in the United States, mainly in California, some in New York and Texas. So Tesla does seem to be expanding quite rapidly, and I think by next year, by the time some of these competitors come out with their competing cars, Tesla would have advanced much further than where it is today. So yeah, thanks for watching. Let me know what you think in the comments section below, and if you're long or short Tesla, please subscribe to our channel and hit the thumbs up button. Thanks very much.